Hi everyone, and welcome back to my Richest Man in Babylon January 2023 investment portfolio update. It's safe to say it's not been a great month, but in this video we'll be discussing the updates to my stocks and shares ISA holdings since the last video in December. See the link in the corner for that video. Let's get started. So first off, I'm delighted to say that I've received dividend payments from some of my holdings. So if you're not familiar with what dividends are, essentially, dividends are a portion of a company's profits that's paid out to shareholders, and it's always a nice bonus to receive them. So since my last update, I've received payments from Civitas Social of 86p, Scottish Mortgage Trust 62p, UK Dividend ETF £3.52, Renewables Infrastructure £3.98, and HICL Infrastructure at 85p. Although these aren't necessarily groundbreaking, this makes a total of £9.83 in dividend payments for December. That's enough for Netflix. Nearly. But I'll be reinvesting those dividends back into my portfolio to continue growing my wealth over the long term. So I also wanted to provide an update on my overall portfolio performance. As I said at the start of the video, unfortunately my portfolio is very much in the red. So my money weighted rate of return is negative 23%, and my overall portfolio is in the red by £3,679.94. So it's important to remember that the stock market can be volatile, and it's normal to experience ups and downs over time. As I said in my last video, it's also important to keep in mind that investing is for the long term, and that we shouldn't get caught up in too much of the short-term fluctuations of the stock market. So going into where my portfolio has actually lost money, the bulk of the loss has been caused by a couple of specific stocks. So first up, Tesla has been down 34% in the last month. So for those not keeping up with the news, there are several factors that have contributed towards this decline, including investor concerns about Elon Musk's role at Twitter, his unplanned stock sales, as well as concerns about Tesla's slowing demand for vehicles, particularly in China. Additionally, just last week, Tesla revealed it missed its delivery target for 2022. Coming in at around 1,400,000 vehicles, meaning a yearly growth of 47%, which to me still is a real positive. Despite these short-term challenges and a change in investor sentiment, I'm ultimately looking to the long term with Tesla. I'm what could be described as a hyperbull on Tesla, and subscribe more to the Cathie Wood and ARK Invest line of thinking, who recently gave Tesla a price target of $500 based just on car sales for 2026. So I think an important point of what people are missing is that it's important to separate the stock price from the value of the stock. So a price target isn't a prediction on where a stock is going to be on a particular date, but rather it's an estimation of what the stock should be fairly valued at. In my opinion, there's a huge disconnect between Tesla's current stock price and where it should be valued at. So this presents a real opportunity in my view, and I'm happy to be buying at these levels when I get the capital. So I believe Tesla has several key advantages that sets it apart from the competition. These include pricing power, an unassailable lead in technology, their control over manufacturing, and a proven ability to execute time and time again as they work towards their vision. In short, electric vehicles are simply better than internal combustion vehicles. It's the future, and Tesla is simply light years ahead of the competition. I only see the Chinese auto manufacturers as being anywhere close to matching Tesla. And even then, they're nowhere close. The main challenge I feel Tesla has to address, as well as scaling manufacturing, is the affordability of vehicles. At the moment, they're a luxury, and a lot of people are spending money they wouldn't otherwise spend on a car, just to get a Tesla. That speaks volumes. As soon as the demand lessens, Tesla will inevitably reduce prices. This is not a bad thing for investors. It's rumoured that the upcoming Investor Day will see further changes to efficiency in manufacturing, bringing down the overall price to reduce vehicles to around the $25,000 mark. Going back to Cathie Wood, she pointed out that this is where original car sales took off. In short, how many people do you think would buy a Tesla if you could get one for $25,000 or pounds? When this happens, it's game over, if it isn't already. So another stock that has been down for me in the last month is Apple, down 9% in the last month. This is largely down to concerns about supply chain issues in China. But again, despite these challenges, I'm super bullish on Apple. The company has proven pricing power, amazing margins, and as I said in my last video, is a money printing machine. It's interesting because at this point, I consider Apple to be a consumer staples company rather than a technology firm. And I believe there's plenty of room for growth in a variety of industries for the company. Apple is big enough to get into any industry. The main thing that holds them back is a threat of regulation. Because of this potential for growth, I see Apple as a long-term hold, and I've got a future video planned detailing where I feel Apple can grow into. So in terms of the rest of my portfolio, I'm not going to go into too much detail about my smaller positions like I did in the previous video, because they don't have as big an impact on the overall state of my portfolio. But just briefly, I've had good returns in some of these positions, which will be noticeable if the position was larger. So my Rio Tinto position is 14% up overall, and my Legal and General position is 7% up. This, together with their dividends, make them to be a strong part of my portfolio, particularly as I look to add money in the future. The main negative from these smaller positions is that a lot of my real estate investments are in the red. Again, I'm not too concerned because their main purpose is the dividend that they provide and the diversification into property. As these smaller positions grow in the future, as I invest more money, they'll have a bigger impact on my returns. Not to mention a bigger and bigger juicy dividend payment. In the future, I plan to go into more detail about some of these smaller positions, so stay tuned for those videos. So that's it for my January 2023 Richest Man in Babylon investment update. I hope you found this video useful and informative. As always, it highlights the volatility that is present in the stock market and how investing is very much for the long term. And therefore, you shouldn't invest money that you can't afford to lose or money that you need in the short term. Investing carries risk, and it's important to do your research. Thanks for watching. Be sure to stay tuned for my next update, which will come next month, and I've got more videos planned in between. I'm really keen to grow this channel in 2023, so a big thank you to the 11 of you that subscribed. It's really appreciated. So for those of you that aren't subscribed, make sure to hit the subscribe button so you can join them. And don't forget to like the video so it can be recommended to more people. And finally, leave a comment below saying how your portfolio is currently looking. It can't be much worse than mine. Thanks for watching.